Before we dive in, just the usual heads up. This is all for educational purposes. It is absolutely not financial advice. All investments have risks, so please always do your own research. All right, let's get into it. We're looking at a really fascinating 5-day period for the DexFi fund, and there's a lot to unpack. We're talking a new all-time high, incredible bond growth, and some major strategic shifts happening under the hood. Okay, let's kick things off with the big headline number. The fund has just absolutely smashed through its previous record to hit a brand new all-time high of over $2.24 million. That's a jump of $62,000 in just the last 5 days. But this is where the story gets really wild. This new record, it was set while the market's fear and greed index is stuck down at a 9. We are on a 23-day streak of extreme fear. You know, that's the longest continuous stretch of fear we've seen since the Terra-LUNA crash way back in 2022. So that brings us to the central question for this whole update, right? How on earth does this happen? How can a fund not just survive, but actually thrive and set new records during one of the most fearful market environments we've seen in years? Well, let's break it down. So first up, let's look at the core growth metrics. This is really a story about how the fund's engine is getting bigger and stronger, precisely when the rest of the market is weak. Now check this out, because the bond growth is where you really see the story. We're now at nearly 55,000 bonds. That's over 14,000 new bonds minted since that crash back in early February. Think about that. Each bond is like a share in the fund's revenue engine. It's a 35.6% expansion of the fund's capacity. And we've added another 3,300 bonds in just the last 5 days. That is conviction. And all that expansion is directly feeding the yield. Daily profit has more than doubled from that holiday weekend low of $1,600 to over $3,300. Right now, the Epoch APR, that's the annualized rate just for this period, is hitting just shy of 100%. Now, while that's fantastic, we always got to keep it in perspective with the long-term benchmark, which sits at around 65%. But you know, this kind of growth doesn't just happen on its own. It's being actively fueled by what is probably the biggest story of the last 5 days, a huge strategic reshuffling of the fund's assets. And wow, this slide just lays it all out. This is active management in real time. On the left, that was the vault 5 days ago. You can see it's dominated by BNKR. Now look at the right. That's today. Just look at that explosion in REI, now spread across 8 separate pools. TIBBIR has surged to over $91,000. And hey, we've even got a brand new token, VVV, popping up with a nearly $16,000 position. This active management also extends to the fund's capital efficiency strategy. So let's take a look at how the Aave margin position has been expanding to help fuel some of this growth. Look, you can see the trend playing out right here. Over the last 6 days, the amount of ETH supplied as collateral has grown from about 186 ETH to almost 269 ETH. And at the same time, the health rate has been deliberately brought down from a super conservative 2.54 to a more aggressive, but still safe, 1.87. So here's the bottom line. The fund is using over $500,000 worth of ETH to borrow about $231,000 in USDC. And that borrowed cash goes right back into those fee-generating liquidity pools we just looked at. The liquidation price for that ETH collateral is way down around $750, meaning ETH would have to crash by over 60% to be at risk. That's a huge safety cushion. But this trend toward a lower health rate is definitely something to keep an eye on. Oh, and also notice the wallet balances ballooned to over $91,000. That's a big jump. Now, all this expansion on the base chain, well, that capital has to come from somewhere, right? And that brings us to a very deliberate and strategic capital shift away from the BNB chain. And the numbers here don't lie. The fund's exposure on BNB chain has been cut by nearly 40%, down from 155K to about 94K. But this isn't a failure, this is reallocation. Capital was trimmed from some lower performing pools and redeployed to those booming REI and TIBBIR positions on base, which now makes up 95% of the entire fund. Of course, none of this happens in a bubble. To really understand the fund's yield, we have to look at trading volume and put it into the context of this really fearful market. So yeah, you can see volume has dipped through the week, landing around 5.1 million on Sunday. But look, this is a completely predictable pattern. It's a mix of the natural weekend slowdown combined with that 23-day extreme fear streak that's just suppressing market activity everywhere. But what's really cool, even on a lower volume day, is what's happening inside that volume. This chart shows a really healthy trend.
BNKR's concentration is down to just 36%. I mean, it was over 60% earlier this month. And meanwhile, you've got tokens like LMTS and REI holding really strong shares. This improving diversification is exactly what you want to see for long-term health.
Okay, we've gone through a ton of data. The all-time high, the bond growth, the big Wall Street shuffle, the market context. So let's pull it all together for a final, transparent verdict on the fund's health. So this dashboard kind of gives us the whole story at a glance. We've got solid green lights on the most critical things: fund value at an all-time high, incredible bond growth, strong recovered yield, and excellent vault diversity. Then we have some yellows for things we're just monitoring: the Aave health trend, the strategic BNB contraction, and the low market volume. And really just one red light: market sentiment, which is totally outside the fund's control anyway. So the overall verdict is pretty clear: structurally healthy. The core engine, the number of bonds out there generating fees, is the largest it has ever been in the fund's history. And as we've seen, that engine is being actively and aggressively optimized to capture whatever opportunity comes next. I mean, let's just end on this. $2.24 million, 55,000 bonds, active vault optimization, and all of it was built and strengthened through the longest, deepest extreme fear streak since the Terra crash. That right there is the structural story.
As always, thanks for tuning in. Just remember, this isn't financial advice. APR is variable. The Aave health rate is currently 1.87. Bonds have that exit fee, and past performance doesn't guarantee future results. Make sure you always do your own research.